Well, thank you, Will, and thank you everyone for coming today to see this event. I know today is a holiday, so it's nice to see that we've managed to pull a lot of people away from any of the other things that they could be doing to talk about Asia. So that is something that's a very positive sign for me. The ADO, just for those who are not familiar with it, is an annual publication that comes out around this time. We also have an update that comes out in September. It includes country forecast for 45 countries that we refer to as developing Asia. You can think of it as Asia ex-Japan. For us, that goes as far west as the southern Caucasus of Georgia, Armenia, Azerbaijan, and then all the way to the Pacific Island economies. It includes the 3 of the 4 biggest economies in the world, as well as some of the smallest. So it's quite a large grouping. In addition to the outlook, we always have a theme chapter, which in this particular case is on confronting rising inequality in Asia. If I could begin with the key messages, despite the weak global environment, developing Asia will largely maintain its growth momentum in the next couple of years. Inflation will moderate. It had spiked to 5.9% last year, but we're expecting it to come down this year and the next, in part because some of the pressures from global commodity prices have eased. But oil prices and the geopolitical risk in the Middle East are a big concern. Really, the greatest risk to the outlook at the moment is the eurozone crisis and whether it will start to bubble up again as it did last summer. And we'll discuss that further in a bit. Although, despite all of that, currently we do not see a clear case for any short-term counter-cyclical policy, any macroeconomic stimulus measures at the moment. And finally, although developing Asia has made great strides in raising living standards and reducing poverty, the region is now facing a new challenge, and that is of rising inequality. So let's start with the regional outlook. Last year, developing Asia expanded by about 7.2%, which was a bit coming down a bit from 2010. Although keeping in mind that much of 2010's growth was a rebound from the global financial crisis. We're expecting it to come down a bit further this year, in part because of the weak global demand, to about 6.9%, before picking up a little bit next year. But this is also a return to a more sustainable level of growth as well. So the growth rates that we're looking at here are not something that we see as a particularly weak outcome for the region. Underlying our assumption is that we're expecting quite weak growth from the major industrial economies. So taken together, the eurozone, U.S. and Japan, we're expecting that they will grow by only about 1.1% this year, and pick up a little bit next year to 1.7%. So this is still quite a bit below the trends for these regions. So if we look at what has happened in terms of growth in 2011, we are seeing some signs that are comforting to us in that although the external demand is rather weak, developing Asia should be able to deal with this relatively weak demand because we're seeing a much stronger domestic demand. So unlike in the earlier post-global crisis years, it's private consumption that was really a strong point for a number of economies, and that's the blue bar there. And it seems to be coming through for across the board where the data is there. And this consumption growth was also backed by steady improvement in labor markets in these economies. Investment, on the other hand, has weakened sharply in many economies, although still quite strong in China. And this shift was led largely by destocking of inventories in many economies. If we look back at the time of 2008, 2009, even 2010, really the big driving factor was that we first had the global downturn, which went from end of 2008 through the middle of 2009, early signs of recovery, and those tended to push the overall viewpoint. But now we're starting to see that we're into a more normal period. That is, that where country-specific issues are having are playing a bigger role, and these factors include such things as the natural disasters like the flooding that we saw in Thailand, availability of resources, and this is a big story in the resource-rich countries in the Pacific as well as the Southern Caucasus. And as well as the strength of domestic demand, like we were seeing in East Asia. But this disparities even within Asia. As I've got 25 minutes, I won't try to go through this. We will have a set of highlights for everyone, and the full report is available online. As I mentioned, inflation is expected to recede. If we look back to the month-by-month inflation in 2011, it was the early part of the year where there was a lot of optimism about the recovery, also tending to push up global commodity prices. That started to fade towards the middle of the year. Global commodity prices hadn't come down, but at least had stopped rising. And so that had tended to take some of the inflationary pressure off. Within the region, many economies also were clamping down on monetary policy at that time. With the expected, as part of our outlook, we're expecting that global commodity prices will continue to stay relatively flat oil prices as our baseline, but clearly that's a risk to the outlook. And that this, in part because of the soft industrial country demand, will also tend to keep inflation in check. But as I said, commodity prices is clearly a threat. Even if we look at the last few months, the oil price was starting to creep up and pushing up other energy prices. Although had we extended this another couple of days, it would have come down again. So there's a lot of uncertainty about the oil price in our forecasts. But our baseline is that this will not create any strong pressures, but that should there be any spikes, we might see both somewhat of a decline in growth, but more importantly, a pickup again of inflation. The eurozone crisis, the biggest risk, the nature of that risk has changed. Previously, the big concern was that a disorderly default of Greek debt would lead to a liquidity crunch like we saw after the decline of Lehman Brothers. Essentially, global financial markets, the shift to safe assets would essentially leave the region dry of foreign currency liquidity in the system. That seems to be gone. We're now seem to be more into a situation where the fiscal austerity that's being put in place in Europe is slowing growth here. We're not expecting any strong push in the U.S. either when it comes to fiscal stimulus, such that this weak external demand is likely to continue. But as our forecasts show, Asia could manage under these conditions. Just it'll be a somewhat slower rate of growth. But if the situation to worsen, there are a couple of channels that need to be taken into account. Global value chains, which is the movement of parts and components across borders within Asia, the trade across those borders to produce goods and services ultimately that come to the U.S. and Europe, tend to amplify these shocks. So orders for final goods stop, and that means all the way down the value chains those orders stop. So that tends to amplify any further shocks. The second is that trade finance. If a slowdown was also coupled with another liquidity crunch, trade finance becomes hard to come by, and that has implications for growth in Asia. The other is the impact on capital flows. As we saw last year, when in August, when not within Asia, but the uncertainty in the eurozone, the downgrading of the U.S. Long-term credit essentially led everyone perversely into U.S. long-term credit as a safe haven and pulling capital out of Asia. So also vulnerable to these shocks. One thing I would like to highlight is that although Asia has been diversifying its sources of export demand, it's still quite vulnerable to these kinds of shocks in the major industrial economies. The share that's accounted for by Asia, the large red part, in some ways belies the fact that much of that is not in final goods and services, but rather in these parts and components going across borders. That being said, China is coming up as a larger source of demand for final goods and services. So we are seeing over time a bit of diversification, but the vulnerability is still clearly there. As I mentioned, we don't see a clear case for counter-cyclical policy. Currently, we don't see a big output gap. Essentially, the economies are generally operating around at their trend growth levels. If we look at monetary policy, it still remains relatively accommodative. Real interest rates are fairly low. Even with the slowdown in food price inflation has brought down CPI inflation, but if we look at the core inflation, that is, strip out the effects of oil and food prices, we are still seeing that there are inflationary pressures there. And finally, credit in the region, although it's been moderating, it continues to grow strongly at two-digit levels. So this suggests that monetary policy is really not the tool to deal with the current environment, although clearly many policymakers are, again, reducing interest rates and making monetary policy a bit more accommodative. The second point, policymakers do need to keep in mind that capital flows are quite fickle in the current environment. And it was really, a year ago, the big concern was that the region would be flooded with capital, foreign inflows, that would essentially put a lot of pressure on interest rates and then have real sector impacts. And all of a sudden in the third quarter, that turned around 180. So it's not just the magnitude of these flows, but the unpredictability on the direction that can create problems. Here there are a couple of things that can be done. In part, having more flexible exchange rates for countries that have had persistent current account surpluses is one way to take away that one-way bet on the movement of exchange rates. For others, though, there may be a role for some sort of financial controls, but this we can talk about later if the issue comes up. But where we do see some role for macro policy is that because Asia has essentially grown as a share of the global economy, Asia's growth itself has implications for the global recovery. But at the same time, fiscal positions, having a prudent fiscal policy, was one of the reasons why Asia was able to respond so quickly to the last crisis. And so it's something that value of that should not be underplayed. So there can be a role, though, for budget neutral measures that would not necessarily be the types of stimulus policies that we saw before, but would shift towards more of the social spending to build human capital. And this comes into some of the discussions that we'll be talking about in terms of the theme chapter, in terms of rising inequality and how changes in fiscal policy can be used for that. Now, let me turn now quickly to the theme chapter. Just to set the stage, over the last 2 decades, between 1990 and 2010, developing Asia averaged annual growth of about 7% a year, every year. That includes the period of the sharp decline during the 97-98 Asian financial crisis, and includes even the most recent slowdown. So that impressive growth had led to a reduction of poverty, such that about 700 million people were lifted out of poverty during that period. So although developing Asia grew much faster and reduced poverty quicker than any other region, we're now starting to see a new challenge presenting itself. And that is that inequality is on the rise in Asia. The performance of growth and poverty has, in more recent decades, been also accompanied by a rise in inequality. Of the 28 countries that have comparable data on which to look, about 11 of these countries had a rise in their Gini coefficient. But importantly, these 11 includes the three largest economies of PRC, China, India, and Indonesia, such that 82% of all of Asians were living in a country that was becoming more unequal. If we treat developing Asia as a single unit, so imagine for a moment if we were to ignore the borders and just look across all Asian households, and we were to do a Gini coefficient for all of Asia, that Gini coefficient would have risen from 39 to 46. And for those of you who are not familiar with the Gini coefficient, a value of 0 would be perfect equality, every household having the same income. Whereas a value of 100 would mean one person had everything. So you can see that we've moved from a relatively equitable position to somewhat less equitable position in those periods. On top of that, the rich have benefited from growth more than the poor have. This is a simple quintile ratio, which is taking the per capita income of, well, in this case, it's per capita expenditures of the group that spends the least, the 20% at the bottom end of the spectrum, as a percent of the top of the spectrum as a percent of the group at the bottom end of the spectrum, those who spend the most over those who spend the least. And the annual growth rate of that quintile ratio is suggesting that the rising inequality is being accompanied by a shift from the poorest to the richest. So, for example, in China, the quintile ratio almost doubled between 1990 and 2008, from about 5.1, so that the richest were spending about 5 times what the poorest were spending, to now about 9.6. So essentially the richest are now spending on a per person basis about 10 times what the poorest spend. Looking at again, coming back to that notion of a borderless Asia and the Gini coefficient there, we ask the question of what is driving that. Is this that across countries things are becoming more unequal, or is it that within countries things are becoming more unequal? And it is true that between country inequality is rising, but much of this is really just, if we take out China, the effect of China, it's just so large, and it itself is becoming more rich so much faster during that period that led to part of the rise in inequality. But really, 2/3 of total inequality within Asia is due to inequality within country borders. Now, to put this in context, though, Asia's inequality is still lower than other developing regions, but it's important to note that it's the direction that matters as well. So it's also rising over time. If we took, in this case, an average of Gini coefficients across Asian countries, the average is about 38. Whereas if we compare this with Latin America, an average just across countries, the average there is about 52, so much higher. But the region's experience of rising inequality is in many ways a change from the caricature, if you will, of Asian growth, the growth with equity story that we saw in the 1960s and 70s. So this is a fundamentally different view of Asia than we had in the past. And on top of that, if we look not just at the levels but the direction, while Asia is becoming more unequal, Africa and Latin America are becoming more equal. So inasmuch as people tend to compare themselves with who they were and how they felt 10 years ago rather than how it feels to live in another country, the citizens within these countries are feeling that things are becoming less equal over time than they were before. Another important aspect of inequality is it's not just about the inequality of income, not just about the inequality of expenditures, which we think of as the outcomes of the process, but rather the opportunities that people have in order to engage in that process. those basic opportunities are becoming, still have quite a bit of inequality there. For example, if we take access to education, school-age children from households in the poorest income quintile were 3 to 5 times as likely to be out of primary or secondary school. That is, if we looked at the primary school enrollment by income group, it is that much more likely that a poor child will not be in school. And this really jumps up if we look at tertiary education, where it's more like 10 to 20 times that a college-age person from a poor household is 10 to 20 times less likely to be attending college. And you can see that that's going to have important consequences for future income earning possibilities. More stark are some of the health indicators. Infant mortality rates among poorest households in some countries were double or treble the rates of the richest households, so that essentially to be in a poor household doubled or tripled the likelihood that a child would die. And in most extreme examples, in fact, a poor infant dying at birth was 10 times higher for an infant born in a poor household than for an infant born in a rich household. So these are really quite stark differences. One positive sign was that we are seeing increasing gender equity when it comes to primary and secondary education. But again, at the top end, tertiary education, we are seeing still persistence of gender disparities there. Inequality is important for 2 reasons. First, had that growth been more equal, that success that Asia had in reducing poverty could have in fact pulled more people out of poverty. Taking everything else equal, which is always a very suspect assumption, but is one that economists proudly make. 240 more people could have been lifted out of poverty had that same rate of growth been there, but that the level of inequality had not changed. And this is equivalent actually to about 6.5% of developing Asia's population. So that gives you a rough idea of the magnitudes of what could have been done had things been done more equally. But inequality can weaken the basis for growth itself. Greater inequality does tend to bring calls on policymakers to respond to special interest groups, respond to groups that may not be in a way that will support future growth. We do feel there's a need for a response, but one needs to take into account, one needs to make that response in a fashion that is supportive of future growth by looking at what exactly the channels are that are leading to greater inequality. And finally, though, an important thing to note is that policymakers do recognize the problem. This we're seeing as more and more more and more countries in their development plans are including targets for greater inclusiveness. China, I think, is really the key one here, but in Indonesia and India as well. And if we take the China plan, that announcement that a growth rate of 7.5% rather than a growth rate of 8% is the new target, although they've always gone well beyond the 8%, at least is a sign that says policymakers are willing to have a slower level of growth in order to get a more equal distribution. So question of why has inequality risen? I see I'm actually at my upper bound, so let me talk about this very quickly. The forces that in fact have led to these high rates of growth, technological change, globalization, market-oriented reforms, have tended to favor capital over labor, have tended to favor skilled workers over unskilled workers, and have tended to favor cities and coastal areas over the inland areas. So the process of growth itself has had some consequences that have led to greater inequality. The evidence of this is we are seeing that labor's share of income is declining as a percent. This a figure here from manufacturing in the 3 largest economies. The returns to education are shooting up. So as I mentioned before, there was already some unequal inequality within education, and those returns to those higher skills are in fact rising in most countries, therefore putting in place the seeds for future growth in inequality, if not reversed. And also the location plays a big role in explaining the rising inequality. The gaps between urban and rural incomes in developing Asia has increased as those between the prosperous and lagging regions. The combined contribution of rural-urban differences accounted for about 54% of the inequality in China. So much of that inequality is really that rural-urban gap. So policymakers can act to reverse rising inequality. We've outlined in the report a series of different policies. First, as I had mentioned before, increasing spending on the poor without undermining fiscal soundness. This could take the form of such things as better targeted support, a support that puts in place the incentives for developing human capital, like conditional cash transfers, broadening the tax base and strengthening administration in ways that provides greater fairness within the tax system, but also mobilizes more revenue to be used for these types of programs. And also eliminating price subsidies, which tend to be poorly targeted, in a way, though, that the poor are compensated. Second, having policies that target the lagging growth centers, and this could involve improving transport and communication links between developed and poorer regions. Fiscal transfers to poorer areas, although in here one would want to make sure that these fiscal transfers are being used in a way such that it's developing the human capital and the access to services in these areas. So not untied transfers, but transfers that make sure that it is developing the basis for the people there to benefit from growth in the future. And finally, promoting labor use to increase the labor share of income. Such things could include removing the factor market distortions which have tended to favor capital, as well as supporting development of small and medium enterprises as a way to bring more employment opportunities to people. So the final point really is that Asian policymakers need to redouble their efforts to equalize opportunities in employment and education and health, to make sure that the benefits of growth are more widely shared, but in a way that also augments the growth for the future. So let me just end there with the key messages up, and thank you very much for for being here today.
Sure, thank you.